Okay, we officially have a problem. Stocks are going up and they're going up fast. So let's talk about what's going on here, what it means for the stock market and what it means for us investors going forward. Because I can see a few people in the comment section and in the Discord as well saying, stocks are going up really, really fast now. What shall we start doing? So hopefully this video is helpful for you guys, and it is a nice change. It is a nice change to see stocks going up. It's been a rough 12 months for the big tech and the big caps. I would say even the small caps and mid caps. It's been a rough kind of 24 months. So it is a nice change to see stocks going up, but they are going up really fast and it's taken everyone by surprise. So let's talk about this today. So if you look at the S&P 500, unbelievable start to the year. 5% up year to date. Well, technically 5.12% year to date. This is insane. The average return on the S&P 500 is around about 10% a year. So the fact that we are about halfway what the average return on the S&P 500 is in the first month of the year is crazy. Like, if this keeps it up, we are on for a record-breaking return year in the S&P 500. So there's going to have to be a cool down at some point. But the big thing is that this has taken everyone by surprise. No one was saying we were going to have a really good start to 2023. Everyone was talking about there might be some optimism towards the back end of the year. It might be 2024. No one was saying that there was going to be a very good start to 2023. And because the S&P is up 5%, what we've seen is other stocks now really rally. So if you look at the Shopify, for example, the stock that I own, currently up 8% yesterday. Year to date, up 23%. You look at Tesla. Tesla is now up 32% year to date. This was a stock that was massively getting beaten down at the back end of 2023. This was just dropping and dropping and dropping. And now this has had a massive rally. The concerns over deliveries and the recession impacting them. And this year, as soon as the year changed, look at the rally that this one's had. The King is performing 31% year to date, absolutely unbelievable. Hims, a stock that we talked about yesterday, that's up 20% year to date. Google's up 12% today. Now, we talked about there some higher risk stocks, some growth stocks, but even when you look at a gem like Google, that's up 12% at the moment, which is fantastic. Square is rallying as well, up 26% year to date. So you can see a lot of stocks even higher than what the S&P's returned. So without doubt, it's great to see so many stocks rallying massive percentage. Now, even though this is going up really fast at the moment, one key thing that I talked about on this YouTube channel for the whole of 2022, and if you were a little bit negative on the market, or you might have seen people that are negative on the market, they were just out saying a lot of these stocks are rubbish. A lot of these stocks are going massively down because they're absolutely terrible. But when you look at the S&P 500, which is up 5%, why are growth stocks booming compared to the S&P 500? The S&P is up 5%, so why have we got so many stocks that are up 20, 30, 40, 50% in this time frame? Well, this is what the bears or the people that be negative on the market don't realise. If you have the S&P drop 20% or the Nasdaq drop 33%, which we had in 2022, this here is going to cause all them growth stocks and higher risk stocks and individual stocks are probably going to drop at least double what they are. So you're talking at least a 40% drop to a 66% drop, and that's at least a drop of that much. Sometimes you might even get some of these stocks dropping 70, 80%. And that's what we saw. When you have these individual growth stocks that are a little bit higher risk, when the market goes down, these stocks go down even more than the market. But people forgot that when we do hit a rally and when we do go on a bull market, these stocks are going to go up massively compared to the S&P 500. And a few people are shocked to see stocks now absolutely skyrocketing and flying up just because the S&P is up 5%. Unfortunately, this wasn't brain surgery. It was obvious that when we have the market just have a little bit of a rally, all these stocks have been beaten down, they were always going to massively rally. And it's not a surprise. We talked about it on the channel multiple times last year. So if you're shocked to see some of these individual stocks skyrocketing, this is it. The market does this. And you think about the more that market goes up, 6%, 7%, 8%, these individual stocks are going to outperform the market and they will boom up. And that's what I was talking about as well, is like some people were bothered that, say you had a Shopify that was down 30%. It's not necessarily a terrible average, because don't be surprised how quick, if we have a rallying S&P 500, how quick Shopify could recover that 30% dip at the moment. because it's so beaten down. And as long as you've got a good stock with a good valuation, you're all right. So that's why there's a lot of booming going on at the moment. All it needed was a little bit of a rally, and all these stocks that are being beaten down, that go down really fast because the index goes down, go up massively because the index are up as well. Why is it going on? Well, there's no clear-cut reason why the stock market decides to go up and goes down. You'd tend to say macro events do tend to move the stock market in the short term. But we know in the long term the stock market does historically go up. But why is it going on at the moment? No one thought we were going to have a rally into 2023. The reason probably why, and we talked about this, I think it was a week ago or 2 weeks ago on the channel, is that when everyone's kind of thinking towards the back end of the year, stocks are going to rally, and there's all this cash on the sideline, all this cash has gone out of the market recently. When you've got all that cash on the sidelines and everyone's kind of going, well, if you wait to probably like August time and then, September, October, that might be the time to come into the market, and you take up some of these bargains, and you look at the economy, and the economy is starting to recover in, past, say, the midpoint in the year in August, because by then maybe the Fed starts pivoting, maybe inflation's come down to 3%, 4%. But the thing is, the market's future thinking. So everyone in the stock market went, okay, well, if it's going to do that in August and I've got all these share prices now, I might as well put the money in now, and I can wait 7-8 months and I'll be at the bottom of these share prices and I rally. So I can be ahead of everyone getting into the market. So I think a lot of people have looked at the situation and gone, well, if we're going to rally into the back end of the year, I might as well go in now at the low prices and just, hold in for the next 7-8 months. And you're starting to have a few people kind of jumping the gun and going in here. And that seems to be the case that's kind of going on. So as long as we see the economic environment still improve, then technically we should probably do quite well from here. If we see the economic environment deteriorate faster, and you see, okay, we might not actually get that rally in the back end of the year, might have to wait to 2024, you might see a few people go, okay, I'll just take my cash out now and wait a few months and see how it's improved. So it seems like there's a few people trying to jump the gun on what would potentially be a quick economic rally towards the back end of the year. Will it stop? Well, it has to do at some point. We can't continue on the way that we are doing. We're up 5% in a month. We're halfway to the average return in the S&P 500. Now, obviously, if you saw my forecast for this year, I thought the S&P would return somewhere between 15 to 20%, and I'm still very much with that. So I think there's potential that we still see more upside from here as the year goes on. But we need to have a breather. We cannot carry on going up on the rate that we are going up. Even though we've been massively beaten down, I don't think we can put in a 5% return in the S&P 500 every month. So at some point we have to take a breather. The big question is whether or not we take a big breather and we give some back, or we just kind of flatline for a little bit. Ideally, obviously, if the stock market was to flatline for a little bit, give it a bit more pause just to buy a few more stocks, that would be the ideal situation, but we'll see what happens there. Next one, is it still time to buy some more? I think so. For me personally, I'm still buying a couple of stocks. I think that when you look at the grand scheme of things, when you look at the S&P, we're still massively beaten down. If you look at the Nasdaq, we're still massively beaten down. Stocks are still at very low valuations, and even though we've only rallied, 10% on the S&P 500, there's a lot of opportunities out there. So I think that some opportunities have kind of gone. I think, for example, Netflix. I think Netflix was a golden opportunity a few months ago when it was in the $100 range. I would look at something like a Netflix now and I would say, if I bought that stock, I would say that's been on a very good run and I would not be buying it. I think that's probably something I would be more looking to sell. So some stocks that gave opportunities a few months ago, I would argue are not opportunities now. But if I was to look at something like a Disney, for example, which I think is still sitting around the $90 range, or Google that is just below $100 still, I think, or it's just maybe crossed over it, or PayPal that's sitting in the $80 range, I would still argue they're still very good opportunities. So if the valuation makes sense, I would still be a buyer. I would just say that there is a few stocks that have rallied a lot that I would probably step away from. But I still think there's definitely opportunity out there when you look at how beaten down some things are. Selling. That's the question. I've seen a few people now going, oh, we're up so much. I've got this stock up. I bought this stock, in 2022, and now, that's gone a really good rally. I think you've got to be careful. I think you got to be careful. I think there's nothing wrong with taking some profit, and maybe profit on stocks that have gone absolutely crazy, something like a Netflix, for example. I think there's never anything wrong with taking some profit on some stocks, but you don't want to jump the gun too early. You don't want to sell an investment too early. You know, you might have got an amazing average that might not ever be seen again, and you might look back on that stock in 2, 3, 4, 5 years time and go, do you remember when we had that 2022 stock market crash and I had so and so at this average? Can you believe that? And since then it's gone up to go 2x, 3x, 4x up, and you're like, I wish I still had that stock at them sort of prices. So you don't want to jump the gun too early, because if this is a massive rally that we're building on, you don't want to potentially let go of some amazing shares if it's an amazing company that you want to hold for the long term. We're talking here about I think it's like a 10% rally off the S&P 500. If this was to be the bottom of the market, which we don't know, and let's just say it is, the average bull market is over 100% return. So you imagine from here, if we have a good bull market for 3-4 years, the S&P goes on to return 100%, and we're talking about, imagine these growth stocks. Imagine what some of these growth stocks would do in that period of time. You'd be talking about some stocks potentially returning, triple what that S&P's done. If this is the bottom and then we go on the massive rally, you don't want to be one of those people that has just gone through all this pain for the last 12 months, buying these stocks and seeing them getting really beaten up. And then as soon as you see some light, you go, right, I'm selling this, I'm selling this, I'm selling this. Because ideally, you've gone through that pain to get the rewards for the next bull run, which potentially could be 3, 4, 5 years. So you don't want to let go too early, but if there's something that's gone a little bit crazy, there's never anything wrong with selling a couple of things, or potentially taking a little bit of profit off the table. There's nothing wrong with that. But just I saw the other day that there was a comment in one of my videos, and somebody sold what I would say is my favourite stock in the next few years, because it's gone up quite a bit. I was like, you might regret that one. That might be one of those stocks that comes in 5x, 10x returns in the next few years and massively outperforms the market. And if you held that stock, would have really given your portfolio amazing performance, and then you sold it out. It's a bit of a risky one. Overall, I think it leads to this though. Dollar cost average. I think as long as you're dollar cost averaging with good valuations, that's the main thing. And if you're a long-term investor, I would still be aiming for planning for the long term. Do you want to hold these stocks for the long term? Especially, when you look at the last few months we've been through, it's been an awful couple of months, maybe even a year, 2 years. It's been an awful couple of months where stocks have been really massively beaten up. And if you are now going to get your rewards for the long term, you don't really let go of them rewards too early. And that's why, for me, I just like to sit back and let my stocks do their things. And in a few years' time, I'll look back and go, is that a good investment? Is that a bad investment? I don't like getting caught up into this even though this is kind of a bit of a day-to-day thing, I don't really like getting involved in the day-to-day things. I only do this because obviously the YouTube channel, and I'm very happy to kind of buy investments, leave them, and see how they're doing in the long term. That's always what I've done. And it's one of the things that I've particularly not liked about doing YouTube videos in the last month, last year, is that there's been so many people that are judging investments off massively short-term things. The amount of times I've seen people that have commented about a certain stock, just take HIMS, for example, talk about HIMS. Oh, HIMS is down, 30%, 40%. It's a bad investment. It's a bad company. And it's just like, it hurts your head because it's such a stupid comment. And it's like, it might be down 30% right now, but I don't care. I don't care it's down 30%. I'm a long-term investor. I'm going to dollar cost average into great stocks. And if it is a great stock, and we'll find that out in a few years' time, I'll have the returns from it. And I'm just happy to sit back and not check stocks on a regular basis. I mean, I have to check it a little bit for my YouTube videos and what to talk about. So, but personally for me, if it wasn't for the YouTube side of it, I would just be so happy to just be in this period of time, dollar cost averaging into stocks and checking them every few months to see how they're all doing and see where they are in the long term. And I think right now in this period of time, that is one of those times where you don't want to get hooked up into seeing what's up, what's down, what's rebounded 10%. I just be looking at this time period of, okay, it's a golden opportunity. I'm buying stocks and I'll see where they're going in the long term, and hopefully I got the rewards from that. And I think that right now, through all this noise, through all the noise of stocks going down, stocks going up, it doesn't matter if you're a long-term investor. It doesn't matter where they are this month, next month, the month after. It matters where they are in 2, 3, 4, 5, 6, 7, 8, 9, 10 years. And that's the big thing you want to be aiming for, is that right now, if I buy this stock or if I hold this stock, will I have the rewards in years' time? And that's what you want to be looking at as a long-term investor. So all this kind of, after making you watch this video, I guess, really, but, after all this talking about what's going on in the short term, if you're a long-term investor, it really don't matter. You're more focused on, is that company going to deliver financials over the next few years, and you'll get your rewards. As long as you do that, and we're in a better time, a more bull market, you'll do very well. And that's what I'd be staring at as a long-term game plan anyway. So for me, if stocks go up now, I'm not really bothered. If stocks go down, I'm not really bothered. I'll probably just buy more. For me, it really matters where these are going to be in the long term. And right now, I think there's some golden opportunities. And if you've been buying them, you'll do very well. And if you still want to buy some, even after this rally, I still think you'll do very well, as long as those companies financially perform amazing. So that's the video for today, guys. Hope you enjoyed it. Hit the like button if you're new around here, subscribe, and I'll catch you in a bit.